Hey traders, hope you all having an awesome weekend. So as usual, on weekends, I want to give you something valuable to learn so that it will help you to understand trading in more efficient way and so that you can able to take efficient trading decisions. Now, in this weekend's video, I'm going to show you how the price action reacts from the zone and what happens if the price did not reach the zone. And sometime when the zone is broken, why do I mark a zone really high? And in that case, traders get scared that is it going to be fall or rise this much high? So that is what I'm going to clear what happened when the zone is broken. Why do I look at the next level that is sometime really far, and why do we enter the counter trades from the level that is quite far from the price? So it is something that will help you to learn to understand the zones more efficiently. So if you want to skip it, you can see the timestamp right up there, but trust me, if you want to watch the first part of the video, you will learn how to trade efficiently from the area of value and why are we entering the counter trades from the area of value if the zone is quite far, and what happens if the zone is recently broken. And it will also reflect on natural gas, because the situation of natural gas is currently showing me the exact same pattern. The zone is recently broken and the next zone is quite far. So the first part of the video will also clear that concept for you. So before I continue, we have a new partner broker, which is Crude Oil, as most of you have already seen them. And the good thing about them is if you don't want to join the priority group, you can still join the Crude Oil, because you will still get a cashback of up to 20% at the end of the month. So even if you don't want to join my priority group, as you guys know, if you join my priority group through the brokers with a minimum 1k deposit, you will be added in my group for free as long as you are active with them. But if you are someone who say, no, I just want to join broker and don't want to join the priority group, then you can still benefit from them with the cashback. And they're also in the market from 2006 and they're also a reliable brokers. So check the link in the description. Any questions, just email me at support@moneymarkets.net. So I'm going to start it with natural gas with some good example, because I know most of you like to trade natural gas, and that is why I want to show you something that will help you to understand the concept of area of values. Right, so at this point I'm at the replay mode, so it will help you to understand it more efficiently with a visual representation. Now at this point, what are we looking at? So if you follow me, we are looking at a possible double top pattern, right? Because the price is pushing up from here, and now we are only going to look for the reversal trades if we have a double top condition. So let's see what the price action does. So price pushes up. Now, what do you see here? Do you see any sort of double top pattern? Now, if you are my student, if you follow me here on YouTube, or even if you are my priority members, you have seen the double top, double bottom trades, which is what I'm going to talk about in the second part of this video. Now, at this point, when we have no double tops, when we have no conditions, what we're going to do? We're going to leave it as it is. We are not going to enter any trades. But what happens after that? We had a break of the area of value. Now, what happens if the price breaks above the area of value? This area of value that was a previous resistance will now turn support, and it will now likely push the price higher. And now we are going to look at the level above, which is right here and which is quite far. And at this point, most of you might be scared that what are we going to do in between this area? So we are now trending above 50 and 20 EMA. In that case, very important, if we get a conditions like a price retest the zone followed by bullish engulfers, we only gonna take long trades till we are in this area of value. But what if there is no condition? But what if this area will not act as a level of support? Now, when the price action breaks above the area of value, you will see two things here. You will see either a momentum, then a pullback. This area will push the price higher to the next level of support. Now, when the area is broken, why do I see a level above right here? Because at this point, most of the sellers will lose interest. Why is that? Because now we have a liquidity zone here from where we have a likely chance the price will push lower, and when we have a strong buying pressure and price breaks above the zone, that shows that we have a buyers in control, and at this point the sellers step back and we have a buyers taking overs and gonna take and keep on taking buy trades. Till when? Till we have a next seller waiting for us to push the price lower. And where is the next seller? The next sellers are at the level of resistance or order block zone, or a supply zone from where we can get a likely chance where the price will push lower. And before that, in this area, we do not have a good level from where the price can likely fall. That is why this area, according to my rules, according to my students, they are learning, what is a good level, what is a better level, what is the best level. And for me, it is a best level. That is why I will leave this area empty and wait for the price to reach this area to take my next counter trade. Until then, we're only going to look for buying opportunity. But as you know, nobody has a magic wand and nobody can predict the market 100%. And if the price, let's say, don't hit this level, what happens? And some of you, they do the mistake when they see a break above, they say, okay, Umar have said that the price is going to hit the next level. They start buying here massively, and that is the mistake I don't want you to do. I want you guys to look for a pattern, condition when the buyers are telling you, yes, we are prepared to push the price higher. So let me show you what happens after that. Right, we have a push up, and now do you see any buying condition? No, we have no buying condition yet, the way you learn here on my YouTube channel, or if you are my priority member. Right, we have a push down, price is pushing down. Do you see any buy condition? Now, if you say if this is a bullish engulfer, yes, it is a bullish engulfer. Now, it is not one of my buying entry pattern. It did not hit my zone. Yes, if the price forms this pattern at the area of value, I would have entered this trade, but it is above and it is not one of my valid pullback entry. It invalidates one of my rule. As you know, we have a full long chapter how to identify a pullback entry with the valid rules. It is something I can't explain in a single video, but in a nutshell, it is not a valid pullback entry. We have no condition yet. We have now a pullback. What happens? Nothing, no condition, broke below the zone. At this point, the traders who bought here, seeing this level and getting excited that now, yes, we are going to hit this level because this analyst has said that this is a level from where we are going to enter next. But to get to this level, we need to see conditions, right? Or a price action telling you, yes, we are going to push higher. We have no condition here, so there is no need to be taking your trades. Now, at this point, what do you see? At this point, if you follow me, I will be possibly looking for a head and shoulder pattern, a reversal pattern that can now push the price lower back to the demand zone. Now, at this point, I will be only interested to sell this market. And the reason is we are now back in the zone. The reason is we have a left shoulder formed. The reason is we have a head of this pattern formed. All I want to see a right shoulder at this termination zone. If you are my student, you know how to mark these. If you follow me, I keep you guys informed with the moves as well. So now we have a left shoulder ahead of this pattern. Price is pushing lower and broke below 50 EMA. And at this point, as you guys know, that all I want to see a sell trades as now we are broken below and also waiting for the right shoulder. So price pushes up. And we had a right shoulder right here, and this was a trade I've also mentioned in my YouTube video. And as you can see how nicely the price then pushes lower and fall from here with the both entries, entry number 1 and entry number 2 has been triggered. So that is how the price action works. If it broke above, that doesn't mean if it gonna push up for sure, but it means we have a likely chance that now price will push up to the next level. And the next trade will be only from this area of value, as now we are broken above. So we are not interested in sell trade unless we see a condition for sell, which is now a head and shoulder pattern. Price broke below. We had no buy condition. Yes, if we had a buy condition, that would be a stop loss. But as we have no buy condition, so we are out of the market and we are not investing our hard-earned money just randomly. So I hope that clears you the concept of that. And in today's analysis of natural gas, something similar has happened, and that will also make it easy for you to understand what price action can likely do next. And more importantly, and patience in trading is very, very important. And if without patience, you are not trading, you are gambling in the market. And I keep repeating that in every single video so that you guys custom to it and stop making mistakes, being impatient, being greedy, and getting fearful when you see your trades going in a loss. A very good example of trade alert that was sent last week. Now, this was the trade alert I've sent to the members on 22nd of January. Now, that was a pain in the ass, but as you can see, the roller coaster ride of this trade, and as you can see, an example of being patient, an example of not being greedy. And right here we entered at this bearish engulfers and price was trending lower. All we are looking at the bearish trade, and if the price is trending lower, we are just riding along with the trend till the price he reaches area of value. Now at this point, price bounce from the area of value, then forms another bearish engulfer after a good bounce that is enough to hit your target, and that bounce was easily 61 pips. Now at this point, when we entered here, if you see from entry, it took 9 days and 20 hours, and for this trade, just for 40 pips, you waited 9 days and 20 hours. But that is not just 40 pips, that is your money playing in the market, and you're also in the other trades waiting for the price to play out in your favor, or it can go against you, but we have a stop loss there. At this point, if you see here, when I entered this trade, straight away the price pushes up and I was in a loss, and then it reaches almost to my take profit, and that was a pain, and I was still in the trade. I did not exit it because I've seen my trade in profit, a very good profit, trust me. Then the price pushes back up, almost about to hit my stop loss. Now at this point, if you are a beginner, what you'll do, if you are a beginner, as you can see, after this roller coaster ride, profit loss, and then what do you see? A price gets to your level again, almost near to your take profit, then pushes back up with a wick, almost hitting your stop loss, and then eventually the price pushes lower, hit your take profit. That is a good example of being patient, not cutting your profits with a fear when you see a price back in your area, or with the greed when you see the price is here, you say okay, let's cut your positions. But if you do that again and again, it will hinder your risk to reward ratio. So that is why once you enter your trade, once you click a buy or sell button, you are there. All you do, just wait till it hits your stop loss or take profit. Now right here, a good example of Euro USD. Now this trade was also sent in the priority group last week. I entered it exactly similar as AUD USD. Now a good example of not getting panic. The price straight away hit my stop loss, and then it pushes back lower, a heartbreaker, because after that the price hit my take profit. Now that did not affect me that, oh, why did I enter this trade? Why did I put my stop loss? Now most of you would say if the stop loss was not there, we could have a winning trade. Now imagine not putting your stop loss once. Okay, that's fine, it goes in your favor. Now let me give you an example here. Let's say you have not placed your stop loss. Let's say you have a winning trade, and let's say I've sent another position which is right here, a bullish engulfing pattern, just to be used as an example, not as a valid trade. Now you have entered here right at this point, at this candle. Now at this point you say okay, let's not place a stop loss and let the trade run, and it will hit your take profit eventually. Now at this point the price straight away hit your stop loss, and after that what happens? The price keep on pushing lower, and it reaches to this point where the price was about 354 pips. Now that is insane to hold your trades for 354 pips. Now if you do that again and again, this is something you can expect from the market. That is why very important to keep your stop loss and take profit both, and we had a stop loss hit right here. That is totally fine. Even though it pushes lower, I will move ahead and look for my next trade. Right here, as you can see, we have another trade right after that. On Thursday this week, price hit the area of value, and with that we did not enter the trade blindly. With that, what do we have? We had a zone set, already sent these zones to my members, that if the price hit this area of value, all we are looking for a possible counter buy trades if we get a condition. Now what happens? The price hit the area of value, we had a condition which is a bullish engulfing pattern, and that was a nice and easy take profit hit of 53 pips. Right here, a good example of entering aggressively from the area of value with conditions, with preparation, and with all the conditions met, we enter this trade. And what happens after that? If you follow me in priority group, if you follow me on my YouTube channel, and if you are my student, you know all the 6 rules of pullback entry. Right here, right after my take profit hit, the price forms swing high, bearish engulfing pullback pattern. That was valid trade, and trust me guys, I look at small details when we have a pattern here that looks very easy, but we have a 6 rules for that which you will learn in the course. And that is not a sales pitch, just to that is something I'm telling you because I'm very strict with my rules when I see a pattern, and because I'm investing my hard-earned money. That is why rules are very important. But I'm here for you. If you follow me on YouTube, I'm sure you guys have figured out a valid swing high pattern, and that hit of a take profit of 30 pips. So 2 trades, 2 winning trades in a row with a buy condition and then with a sell condition, and let's see if we have a double bottom as well, it can still push high. So that is how I look at the area of value. Then we have copper. I've been sending these zones to my members from a couple of weeks, and as you can see, the price finally hit my area of value. And what do we have? And something very important to learn here as well. So we have a valid swing high bearish engulfing pattern. Right here, I personally like to see a complete bearish engulfer. That is a weak entry, but was a good entry looking at the fact we had a good level that pushed the price lower, and we were prepared to take this trade looking at a nice swing high candle, a good bearish pressure. The sellers has pushed the price lower, and we had this wick here shows a good bearish pressure, and right here we had a nice take profit hit here in copper. Now that doesn't mean that every time price will do the same. There were the times when the price breaks above my area of value and also hit my stop loss. Stop loss is very important again and again. That is why I also show you the losing trade, so that you learn that trading is not just a winning game. You have losses, you have winners, you have losers, because it is your business, not a gambling machine. If you are a gambler, all you expect winning. So a good example of that, and right here we also have a bullish engulfing pattern. Now that doesn't mean you start buying here. Once you set your take profit, once you enter your trade with the rules, let it run. If a condition happens, that is fine. I do not enter the trade like that. Once we have a condition, once we are in the trade, first I look for my trade which I am already in. I don't get deceived with the other pattern. Doesn't matter what happens, but once we have a take profit set, I only exit my trade once the price hit my take profit. Then we have crude oil, and as you can see, last week I've already mentioned to my members that we are now in the area of value. Price hit the level of resistance. I'm now looking for a valid entry on smaller time frames on 1 or 4 hour time frame. Now at this point, what do you see? A nice waterfall from the area of value. We entered with this 382 candle and we had a nice push down. Yes, I know we had one bullish condition, like I've previously mentioned, that if you are managing your trade, that's totally up to you, but we had one bullish condition that wouldn't have been played out. We had another bullish condition that did not play out. Now for me, for crude oil is one of the least favorite commodity, but when the price hit the area of value, only then I take my trades. Or if the price forms some sort of pattern like head and shoulder or at the area of values, support or resistance, only then I try to take my trade, and still with a less risk, because it is not a commodity that runs heavily technically. It is a commodity that also runs fundamentally. That is why we need to look at the news out there when we are trading this particular commodity. But a nice push down from the area of value that have been mentioned in my last report and in my videos as well. Right, so on that note, we're going to start our analysis with natural gas, gold, silver and crude oil. And if you have seen the first part of the video, I'm sure now you can able to understand the natural gas analysis easily, and it will make total sense to you. Now, as you can see, the price is now broken below. If you remember, in my first part of the video, I've already said that the price breaks below the zone, all we are interested for sell trades. Now, as long as we are getting a sell condition, we are only going to enter our sell trade till we are in the zone below right here, which is level of major support. Now, what if the price did not reach the zone I've mentioned? Now, as I've mentioned that I won't be interested in taking buy trades until we are here, or if we are dramatically push up, or if the price forms a condition like head and shoulder pattern. In that case, we'll start to look higher. Now, at this point, we have a formation of left shoulder, right? We have a formation of a possible head of this pattern, and if the price pushes up and then pull back, in that case we have a left shoulder, and we're only going to look for long trade. Now I'm going to show you the similar condition I've already shown you in the first part of the video, but in case you have missed it, I'm going to go through it very quickly, which is right here. It is opposite but exactly the same condition. Now once the price broken above, we are only interested in buy trades and interested in selling from the zone here. So we are not looking for any sell trade as until we are here or broken below 50 EMA, or if the price forms the head and shoulder pattern which we had and the price then started to reverse from here. So similar condition but exactly bullish. Now I also want to point a minor level which is right here in a very short moment. For now, as we have now price made a new low, if the next candle closed as a bearish engulfing pattern, we have a sell signal. If the price opens in gap, then we do not have a valid entry. In that case, we can still get a possible push up to 50 EMA followed by bearish engulfing pattern. So only looking for sell trades now with conditions. So I want to give you the zones above and below to look at, which is 2.395 that goes to 2.475. The zone below, which is 1.959 that goes to 2.059 here on Oanda. So I'm going to go through capital.com and Nemex in a short while. So at this point, the sell trades will be if we have a push up with a bearish engulfing pattern, something like this. Now at this point you'll say, Omar, now we are broken above 50 EMA, why are you still looking for bearish engulfing pattern? Now because we still have a level of trend continuation zone bearish that can still push the price lower, but only with a signal. If there is no signal, what will happen once we are broken above 50 EMA? We have no signal, we have a pullback with a bullish engulfer. In that case, we are going to take long trades, and then we can start to look for buy trades and a possible head and shoulder pattern or a possible pullback entry above 50 EMA. Only bullish trades till we are in the zone above in green, and then we have a possible chance the price will reverse because we are then above 50 EMA and possible pullback with no sell condition, and keep on taking long trades. Now, like I mentioned, we have a zone here from where the price has pushed up in the past. Exactly something similar has happened in the past. When we broken below this zone, all we are interested in selling. Now a very good example of the current situation. Now once the price broken below this level, we were looking at this level, right? This is the level from where we'll be expecting a good bounce. But what happens? Price forms a morning star pattern. Now this is a pattern I don't normally talk about in my videos, but this is something I'll be uploading for my students in MMT, a new strategy with full rules. Once it's ready, I'll be uploading it very soon in my student portal. But for now, it is a valid morning star pattern, right? A reversal pattern for the bullish trade. So that happens at this little area of value, and we are broken below this zone. We had a pullback, and what do we have? We had a bearish engulfing pattern. Now very important point I was trying to teach you, that once we are broken below, all we are interested in selling. We had a pullback, we had a sell condition. We entered our sell trade, take our profit, we are out of the trade. Now at this point we are going to look for a next sell trade. And when will that happen? Once we are broken below this low with a pullback followed by bearish engulfing pattern. Now this is not a valid bearish engulfer because it invalidates one of my rule. So that is not a valid entry, in case you are wondering. But yes, this would be a valid entry, right? And that would be a stop loss hit. But we are out of this trade, and after that we have a morning star pattern that pushed the price higher without a price to hit this area of value. Now that is why conditions are very important. Only going to look for sell trade. Right here we have a condition, and then price broke above and forms a pattern, and that push the price higher. So similar conditions are happening here. We have a bearish condition, the price pushes lower, and now we are only looking for next sell trade that can happen below 50 EMA, a pullback entry, and keep on taking short. Now at this area of little anchor, which is 2.139, that goes to 2.166, we can get a possible entry similar as we had in past. But that doesn't mean it's going to reverse. It means we can go for a little scalp with a bullish condition, and then we are out of the trade and look for next sell condition below 50 EMA if we are still below 50 EMA, and keep on taking shots till we are in the zone below right here, which I've already mentioned. So that is how I'll be looking at natural gas for my possible entries, and conditions are really important. Once we are broken, let's say we have a condition here, once we are broken over 50 EMA, in that case we can start to look for the head and shoulder pattern, and the next buy trade will be only from here. Or if we are broken over 50 EMA with a dramatic push up, or if the price forms a head and shoulder pattern, a bullish pattern, till we are in the zone above in green. So I hope that makes sense to you now, and I hope you understand how I look at the price action and the way I enter my trade. This is how I want you guys to learn and understand that conditions are really, really important. So moving to capital.com, exactly the same condition. Now a good example of price push up. We had a pin bar from the zone, the price pushes lower, exactly the same. Now with a pullback, as price made a new low, if we have a bearish engulfer here, in that case I'm gonna go short again till we are in the zone below. Right here on this platform, this is the only zone I can look for the next buy trade, 1.545, that goes up to 1.672. Once the price gets to my level, I'll start to look for my buy trades. Bullish engulfers, tail bottom, hammer candle, 382 candle, bullish. So for now, all I'm looking at bearish trade. Again, I've already mentioned that if we have a condition like head and shoulder pattern, in that case we can start to look for the reversal trade. For now, I'm not interested in taking buy trades till we are broken above 50 EMA without any sell condition, and then I start to look for my pullback entry, bullish or aggressive entry from the zone which is 2.110 that goes to 2.252 to take my long trade till next level. So keep an eye here. These are the conditions now I'll be looking at for my next buy or sell trade. Here on NEMEX, we are in the area of value. We have a double bottom and we can get a possible bounce to 50 EMA and possible condition like bearish engulfing pattern and keep on taking shots till I see a next condition. So the next zone for this platform I will give you once we are completely broken below, which is right at the zone in blue 2.018 that goes to 2.169. So for now we can expect a bounce and that can be a pullback to the other platform to look for a next selling opportunity. And now if we have a dramatic push up right here, a trend continuation zone from where we can expect another push down, and the next buy trade if we are broken above 50 EMA with a pullback and start to look for the pullback entry bullish. So these are conditions now I'll be looking at for my next trades here on this platform. Then we have gold. Gold is now dramatically pushed down due to the news events and price is now above 50 EMA. So we had a push down below 50 EMA. If you follow me from a couple of years, you know I want to see a good momentum below 50 EMA to look for my next pullback entry bearish. So as now we are again above 50 EMA, I'm not taking any trades for gold till we are completely broken above this high to take my next pullback entry bullish. For now I will have two zones, one above, one below. The zone above, which is 2070.82 that goes to 2077.04, from where I will look for my counter sell trade with bearish engulfers, double top, inverted ambers bearish. And the zone below, if we have a dramatic push down, 1972.57 that goes up to 1987.77. If you have a push down, then I will look for my buy trades. For now, I'm just waiting for a better entry. Now, at this point, if we are broken below 50 EMA, with a momentum, I'll start to look for my pullback entry bearish and keep on taking shots till we are in this zone below in green. So these are the conditions now I'll be looking at for gold. No conditions yet. Wait for the price to form a condition for your next trade. Then we have silver. Silver is still in the level of support. Similar as gold, price has just made a new low. All I'm looking at, a pullback followed by bearish engulfers and keep on taking shots till the price hit this anchor level, which is 21.92 that goes to 21.99, from where I will look into enter my buy trades with bullish engulfers or double bottom entry condition. I'm going to mark the zones again in my next video as I have a very bad internet and it's making it really hard for me to make this video. Imagine this little video took me 3 hours because of a bad internet. So in my next video I'm going to mark new zones for the silver. For now, all you need to look at a pullback entry bearish, pullback with bearish engulfers, as now we are below 50 and 20 EMA both. Last one we have crude oil. It's dramatically pushing lower and we have a major level of support below, which is 67.31 that goes to 68.85. Once the price falls and forms bullish engulfers or double bottom, in that case I'll start to look for my bullish trades only, as now we are broken below 50 and 20 EMA. The price reacted nicely from the area of value I've mentioned. All I'm looking at a pullback with a bearish engulfers and keep on taking shots till we are in the zone below in green to take your next buy counter trades. So these are the conditions I'm looking at for my trades. Remember guys, conditions are very important. All you need to do, follow these 4 factors, which is observation, to observe the market if it's trending higher or if it's trending lower. Then you look for the condition. If the price is trending higher, you need to look for a buy trades, a pullback entries. That is your condition in an uptrend. So after observation, you look that we are now in an uptrend. We have a condition which is a bullish engulfers. Then you have your entries. You enter your trades right here, then you set your targets. Without targets, there is no point of trading. You set your stop loss and take profit. So that is how you need to understand trading if you want to make trading your full-time career or if you want to trading as efficient as possible. So hope you got a value out of today's video. If yes, hit a like button for me, subscribe if you're new so that we can all trade together and trade efficiently. Hope you trade green rest of the week. See you guys in the next video. Till then, take care.